Welcome to Beanstalk, M&J's podcast where we are sharing and showcasing our areas of expertise through conversations with practice leaders on their knowledge and experience. You've done everything right. You've landed the good job. You're contributing to your 401k. Maybe you even saved up a little bit of a nest egg. But if you're honest with yourself, do you really have a plan? Or is your plan just to save and hope for the best? Well, in today's episode, we're going to talk about why wealth management and wealth planning could be the most important blueprint for you and one you might not have, yet at least. And so for today's episode, I'm very excited to be joined by two guests. The first is Don Van Landingham, who is the founder of Guardian Wealth Management. Hey, Don.
Hey, how you doing?
Doing awesome. Thank you so much for joining me.
Thanks for having me.
And also for today's episode, I have Doug Moses, who is a senior partner of Malden & Jenkins and a client of Guardian Wealth Management. Thanks for joining us, Doug.
Pleasure to be here.
So Don, will you just do a favor for our listeners and tell me a little bit about your background, your experience, and your role at Guardian Wealth?
I'm a co-founder with my now retired partner, Kathy, of Guardian Wealth, and I'm a CPA also, financial planner, and have been doing wealth management. First wealth management client I got was in 1987, so I had a CPA practice before then, and then just gravitated into the wealth management field from that point on.
Awesome. And Doug, I know you're here as a client of Guardian Wealth, but just kind of a brief background for listeners too about yourself.
Yeah, sure. So, I've been with Malden & Jenkins now 26 years and counting. Governmental audit partner, serve in multiple leadership roles at the firm, including the executive committee and also as a board member of Guardian Wealth Management. And so I'm just happy to be here, and this is awesome.
So Doug, Don, to really get us started, the first question I have on this topic is just the why. Why wealth management? Why is this important thing for all of us to consider? And how does this really impact us, maybe from a business perspective, or even most importantly, just me personally, from a personal and individual perspective? So Don, will you help me just with that first overarching question, why wealth management?
Well, the first thing that comes to mind, Brandon, is we live in the richest country in the history of mankind. Yet take a guess what the average net worth of your average retired person in America is.
If I were to think about the average for Americans trying to plan for their retirement, I'd hope in the hundreds of thousands, maybe 300K, I feel like is a number that'd come to my mind.
Last study was 70,000.
70,000 is the average.
Right.
I feel like my 300 is even kind of scary. That's even worse.
It is, right? And that's retired. So that doesn't include pre-retirees, which will be less theoretically, right?
Right.
That's why.
So it's just kind of planning ahead to make sure we're not in that situation.
Correct.
To lead to a position to where, and for that why, I guess, what does that mean to us too? Almost leading in from the why to the how, when we're trying to avoid a situation where we can be forecasting out to where we might be trying to survive on a retirement at just $70,000. What's the how behind trying to avoid that?
It kind of goes back to your first question, the why. Most people don't know their why. They kind of live life, struggle day to day, go through all of that without a plan, and they don't really know their why. And so the first real key is to know your why, know your reason of why you're doing this.
So the why is kind of an individual thing.
Yes, very much so.
So can you give me some examples of clients you've worked with and what their whys may have been?
A typical why would be for my kids. So that they can have a better life than I had. Or if something happens to me, my wife or my husband can go on. So it's an integrity thing for them also. And a lot of it could be legacy as they kind of go through life wanting to leave something to their favorite charity as well as to their family and so forth. It's usually something bigger than money. It's something that is at their core of again, what their number one reason is.
And I hear like financial security in some of those too. It's almost kind of a backbone for some of those, whether that's financial security for me or for my family or for my community, even when it comes to, you mentioned philanthropy.
That's a little bit too general, though. When we work with people, we want to get even deeper than financial security, because financial security means different things to different people. And so we take them up a process of what we call a roadmap, where they talk about their reasons, and security is usually one of them, but it's usually something much higher and bigger than that.
So the why is something it might not be evident to me right now sitting. Like I might not even know today what my why is. And so you mentioned that kind of roadmap process. Part of that at the front end is discovering the why.
Yes, it is.
Interesting.
Yeah.
Yeah.
Yeah, it's the funnest thing of my job, actually, is helping the people discover their why and then getting really crystal clear on what their financial goals are.
Well, Doug, I'll turn that question to you then. Kind of your why. I guess, did you already know your why up front before getting in touch with Don and bringing together your blueprint, or was it already something you had to kind of navigate?
For the most part. So, my wife and I, sat down with Don a few months ago and did our financial roadmap. And so for me, at that time, I already knew I wanted to create generational wealth for my kids and future grandkids, right? And so that was one of my biggest why I wanted to do this. And so at the same time, I don't think I had my financial house in order. We have 2 daughters, and we created a will back when they were like 1 and 3 years old, and now they're 16 and 18. And so we don't have any type of estate planning, we don't have any trust set up and things of that nature. So although I felt good about my financial projections and wanting to create generational wealth and increasing my net worth and things of that nature, but, not having a solid will, a trust and things of that nature. And so sitting down with Don and his team, they're going to work with us on they've already put together a financial plan for us. And then we're going to have, future checkpoints where they're going to help us, make sure our, short-term, long-term disability is at the right coverage, umbrella policies and things of that nature. So it's beyond just, managing investments and things of that nature.
Well, it's funny because I'm even sitting here thinking right now, like, it's my why? Like, to me, it's financial security, but you're right, Don, that's a little too general. And
Need a roadmap, Brandon.
you need a roadmap. And so Doug, when you were kind of walking through that, I mean, all those things really resonate. Did you feel like, was that clear on the front end, or was it just kind of like this, you had a sense that, I need to start thinking about this a little more, intentionally and put it together? And was it already clear to you your why, or was the process kind of enlightening?
The process was enlightening. My wife, had previous jobs where she had old 401k plans just sitting out there, and I always wondered, like, okay, we really should roll these. I never done that process before, and so having Gardner Wealth Management on board to help us with that, through that process was definitely beneficial. And then also just looking at other things that we didn't consider. And so, it was very enlightening.
Yeah.
Doug's being pretty modest. He's a pretty sharp guy, and so is Yolanda. I would say on a 1 to 10 scale of financial house in order, they're pretty high up there, 6 maybe, but not a 10, to your point, right? Yeah. But it's amazing to me, Brandon, how many very successful people, I dare say millionaires, whatever, they don't even have a will. It's shocking. And even those who have a will, the attorney may have done the work, but they didn't get everything titled correctly. And if you don't have everything titled correctly, then the wills doesn't flow the way it's supposed to. And so that's a big part of what we do, is get everything in order to do that.
So it's not just, I introed us as, wealth management. We're talking about wealth management, but this is more comprehensive planning.
Yeah, wealth management has really kind of been scaled down. It's really a marketing thing. Most firms that say they do wealth management don't really do wealth management as I define wealth management. They do really still selling products, selling investments or whatever. But true wealth management is you get everything dialed in, and you can't do that one meeting a year with someone. We have 3 meetings a year with our clients, and usually Doug's fairly new in our process. He'll probably take 18 to 24 months before we really can say his financial house is in perfect order. So it's going to be a lot of work for the next 2 years to do that.
Yeah, so that's where my head is going next is now that I realize the problem I have is the why, I get into, well, how do I fix that? What's the process I go through? And you just sort of entered that a little bit.
Yeah.
Like 3 meetings a year.
Right.
This isn't something that happens overnight. So help me drill into that a little bit more. What does that how look like? How does this process start? What do we do in those meetings?
I just happened to bring something with me, Brandon. And it starts with this tool, and I mentioned it, it's called a financial roadmap. And the financial roadmap is our first meeting together. And it's about 75 minutes to 90 minutes long. And we're basically, it goes well if I shut up and they do all the talking. And so I'm kind of facilitating, and it's really interesting when a husband and wife like you and Yolanda did, Doug. One, I have to ask I'll do the first one and ask the other one to be quiet and let us have a conversation. And sometimes they'll butt in. I say, hey, we promise we'll talk. But once I get them all the way up through the staircase, usually one spouse will hear something they didn't know about the other spouse, which is very interesting, right? And then after I finish the first spouse, we do the second spouse. Again, ask the other one to let us have a conversation. And then when they get all the way through, then we talk about that. And then we get talking together on where they're at on what they want their goals to be, which is an entirely different conversation than their why, which is really their values, what really makes them tick as an individual, which again is a very fun exercise for me. And I think it was fun for you guys too.
Yeah, exactly. I really like the thought process of you allowing Yolanda to go first.
Yeah.
So I really was like, yeah.
Yeah, she kind of gave me a couple dagger looks because I asked her to go first, but she did great and was very articulate on what was important to her. And again, it came back to the girls and making sure that they are wise financially as well, which again is rare for people to even think that way. A lot of people are very private about their finances and they don't include their kids, which I think is a huge mistake, right? Of not raising them to understand money. I mean, your average kid coming out of college doesn't have a clue about money, and a lot of them will get in trouble with credit cards and all of that. I don't think that's going to be a problem with your kids because you guys are really crystal clear on what you want for your children.
So the first meeting isn't just conservative, moderate, aggressive.
None of that. None of that. It's really about your why.
Yeah.
And now we do benchmark as you kind of look at the roadmap. And we set the goals, then we benchmark where they're at, and we look at 4 key areas: cash reserves, very important for emergencies and so forth, and then your growth assets, which is what most investment people want to talk about. How much money have you got and how can we make it grow? But that's just one of the things we want. How much debt you got, because we want a debt reduction strategy so that eventually you don't have any debt. And then a pretty detailed dive into their insurance, where there's usually risk management, where there's usually a lot of gaps, as well as the estate planning and so forth.
Yeah, this isn't just taking a look at the nest egg I've been building up and trying to find a professional advisor to help put it in the right mix and get the right, differentiation and diversification. This is stepping back and even insurance is.
Yeah, we get ahead of ourselves with that, I think. I think first we've got to get crystal clear, both the husband and wife need to get crystal clear. What do we want as a family? And then also getting crystal clear on your goals that you want as your family before you get into all the minutia of how we're going to get that.
Yeah.
But to your point, then the second part is once, and again, this meeting, we don't charge for this meeting. So it's an hour and a half of a free consultation. And if they want to go further, then they decide if they want to hire us to put a written game plan together. Because everyone, here's where you're at, and the game plan is here's where we want to go. There's a gap, right? And so the financial plan has all the tactics in it to bridge the gap.
Right. Absolutely. Now, when it comes to the investment side of things, that I think a lot of people, and maybe I was alone in this, but I do feel like that the sense out there is when you hear wealth management, you do just think a professional advisor over the investments, And so even from that kind of shallow view, which, I'm my paradigm is being shifted drastically right now, but even just trying to bring back to that initial narrow view, it kind of leads to questions like, well, why don't I just buy a bunch of mutual funds or index funds, stuff like that? Like I am seeing the bigger picture here, and I'm going to keep drilling into that. But just to that core concept of having investments and having those managed, what is the value of having a professional holding your hand rather than just going out and picking some mutual funds that do have professionals you kind of indirectly helping you navigate?
Yeah, great question. So the value is leadership. The leadership starts with here's your plan and holding the client accountable. So that's the first value of that is, and we meet with our clients 3 times a year, and investments always come up, but only one of our 3 meetings is really geared toward investments. We're always checking to make sure, are you saving what you promised, what you committed to save? And then, the market's going to do whatever it does, but as long as you hang in there with the right strategy, you'll get there. I know that. So that's the job, is to hold them accountable for that. But your typical person that's buying a bunch of mutual funds and whatever, most have never really been through a real recession, and those who have forgotten what one feels like. A lot of people think the pandemic was a recession, and it was technically, but it was very short. I mean, it was a 3-month, market went down 35% in like a month, right? Remember those days, right? But it bounced back very quick. That's not your typical bear market recession type of environment. 2007 through 2008, through March of 2009 was a 2.5-year bear market. And that took 3 legs down, a 20% downturn when the housing crisis first started coming to be known. It took another 20% down when there were some hedge funds that went under that summer. And then when Lehman went under and President Obama was elected with reform in the banking industry, it took another almost 60% downturn for the S&P 500 over 2.5 years. Most people that have all their money in a mutual fund went down 60%, while if they'd been properly diversified, they would have gone down, but nothing to that extent. And I think people right now are chasing returns, chasing what's hot, and that those people are always going to get clobbered when we do have a downturn.
Well, I imagine a downturn too is when big mistakes are made.
Oh yeah. Well, they're being made now too, because people are chasing. AI is in vogue. Every day you hear about Bitcoin, this, that, whatever. And so people are putting all their eggs in that one basket. And eventually, just like it happened when the dot-com bubble burst, people forget. In 2000 through 2002, when the dot-com bubble burst, the S&P went down 50%, but the NASDAQ, which is what's holding most of AI today, it went down 80% and stayed down 67% for 2 years. It was a long road back for that. In fact, for the whole decade, 2000 through 2009, NASDAQ was down 2/3. And most people can't hang in there for 2 years going down 80%. Can you imagine putting $1 million in in 2000 and it turning into 400,000 by the end of that decade, nobody's going to hang in there with that, right? And that's when those big mistakes happen.
Well, and something that I think about too is like that's just a lot to try and try and keep a handle on.
Yeah.
Try and keep your eye out for, and I got a job to do.
Well, and that's so true. It's not a part-time thing, right? And most, do you really want an amateur running your money? And that's really what it comes down to.
And so I don't want to ask you like too many proprietary questions or anything, but how do you approach that? Like when I'm working with a professional to help me keep a handle on that because I don't have the bandwidth or the expertise to do it myself, what does that look like on your end?
On the investment management side? Yeah, we follow 2 Nobel Prize winning strategies that frankly, everybody ought to have managed their money this way, but nobody does. The first one is called modern portfolio theory, which really gets into a question of asset allocation. How much do I want to have of my money in the markets, capital markets, stock markets, and so forth? And markets is plural, by the way. It's not just U.S. And how much do I want in cash and bonds? So that's the first real, because over 90% of your return will be based just on that decision. Then the second part is diversification. But on both ends of that, on the cash and bond side, there's diversification, as well as on the equity side of that is diversification. And another Nobel Prize was won on that called efficient market thesis. So there is science behind what we do, rather than picking up the phone and say, hey, I think Apple's going up another 20%, let's buy more Apple or whatever.
And so, Don, that really resonates with me, just bringing the experts to the table and having just a real mindful view and a full-time job of thinking about these types of things to make sure we're moving forward as we need to move forward for all of our clients. But I do recognize that this is a little bit of a crowded field. When you look at just the wealth management industry at large, there are a lot of providers out there. So I will be curious about some differentiators you have at Guardian Wealth. But before I put that question to you, I'm more curious for Doug's response, because Doug, you walked this journey recently. So what were some of the differentiators for Guardian Wealth that had you work with Don?
Yeah, sure. So I had the opportunity to kind of hear Don's story. He's been in it for a long time. He's been a long-term client of M&J as a tax client. And just hearing his story and hearing the fact that some of his clients who have been with him for over 30 years, they've been retired for several years now, and they still have that same strategy as from the beginning. And they haven't gone to being more conservative as they're in their retirement age. And the fact that they've stayed in their seats during these recessions, and how Don has worked with them about, hey, it's okay, don't react to the market, And so that really resonated with me. And then also, I'll admit, I have my, Malden & Jenkins retirement account, and, I'm maxing out on my 401k account, and my wife is as well. But, we're in that target date fund. And before joining Guardian Wealth Management, I always had questions about why am I in that? Because I don't want it to switch to being more conservative as I get closer to retirement. And so I already knew I wanted to switch. And after sitting down with Don and going through that process and understanding a little bit more about those target date funds, and that they only rebalance one time a year, and it should be doing more than that throughout the year, it was eye-opener for me.
And really, I'm hearing too, just really getting into your why, because I'm the same thing. There's all these best practices, all these common things people say out there about, when you should be, 70% this and 30% that. And at a certain age, this is exactly how you trade. Like it's all just a set science, just follow these 10 steps and you're there. But there's more to it than that.
Brendan, my industry is notorious for noise, and and a lot of it's marketing. Because most financial services firms make more money if they can get their clients to move money around, right? Every transactions generate commissions, generates more money. Well, that's not our approach at all. Like Doug said, most of our clients have the same asset allocation strategy they started with, because I know their why. And usually their why is something more than just seeing the money grow or, to retire with dignity and independence, but it's also to leave a legacy to the loved ones they must leave behind once they're gone. And so that is very important. Doug mentioned the target funds, and you're right. And most people don't realize that. Yeah, they perform well during good markets. They don't perform well during bad markets because they're not properly diversified, first of all. And like Doug noted, the older you get, the more conservative it gets. Where in your last, when you hit retirement, and it's different now, used to you retired at 60, 62, and you died at 70. People are living longer. A typical 62-year-old couple, one of them's still going to be here just statistically till 94. And most of our clients who have access to more money, better health care, so forth, it wouldn't surprise me if both of them don't live, especially with all the advances in medicine, that both of them live past 100. You better get a good return on your money during that 40-plus year period of retirement, or you will run out of money.
Well, and talking about those kind of life expectancy stats, the earlier metric, statistic you threw out there about the average American was 70,000.
Yeah.
Contrasting that against what we were just talking about, life expectancy.
I mean, that average person is living month to month Social Security.
Well, and Don, I was hoping to, after, tapping into your expertise to help me just kind of learn about the world of wealth management, then kind of take it into the philosophy of guardian wealth, kind of curious about how you approach business. But I feel like we've been talking philosophy this entire time. It's just kind of in the DNA of what you do and how you look at this.
It's so fascinating. It was in my DNA as a very young kid. And part of it was seeing some things my parents went through. My dad lost a job very in middle of his career, and seeing how we had to scramble through that. Had a profound impact. Plus, I just love statistics and so forth, and studying how money grew, especially compound interest always fascinated me. And then I met a mentor when I was in college, actually here in Atlanta at Georgia State University, Dr. Norman Dressel. And I don't know what it was, but he poured into me things way more important than getting my college degree. He actually taught me life skills, and one of them was about goal setting and the importance of goal setting, and then reaching financial independence. And that just kind of propelled me into my philosophy.
Yeah. And helping your clients walk that same path.
Exactly.
Yeah.
Exactly.
So what does the onboarding process look like? If I don't have somebody helping me now, or, it might be a situation where I do have somebody, but I'm not quite sure they're the right fit, especially if I'm not feeling like they never really asked me my why, let alone had a targeted meeting with me about it.
Right.
I feel good about it, but maybe there's more to it than this. What would it look like to start having a conversation with you?
You would sit down with me for that hour and a half and do your roadmap. And not everybody ends up working with me. In fact, most don't.
You said there's no cost to that.
There's no cost to that. And I'm okay with that. What my goal is when we do the roadmap is they get clarity, better clarity than they ever had before. And if they still have if they have a advisor, if they take that roadmap to them and work with them with that, I'm cool with that. I did my job, right? Some people
didn't trademark it, and you're not going to come after them.
No, I'm not going to do any of that. And then, and the ones who do come on with us, and some people do it themselves, and they'll help them do it themselves better. Again, that's a win, I think. Hopefully they'll leave and say, you know what, that guy, I didn't work with him, but he's a good guy and he helped me. Yeah. That's my goal. The ones who do end up working with us, the next step to that would be they hire us to write a written step-by-step plan of action to bridge the gap from where they are to where they want to be. And then and again, that's one engagement. Then the second engagement would be, if they want to go further, is to implement that plan with them, which is our 3-meeting process.
And Doug, for our listeners, do you have any advice to anybody who might be just thinking about this? It might also be the right time for me, or I'm in a similar situation to what you were describing earlier, where, I feel like I have financial security. I feel like I'm doing the right thing. I feel like I'm going good, but I need to have some more alignment and be a little, further thinking, especially like you were describing, when it comes to children. Do you have any just general advice for people who might be in a similar situation and listening in?
Yeah, sure. I'll start with my younger self. I wish I would have gotten started earlier, in my career. One of the things I always tell people when they're, talking about getting into other types of investments and real estate investing and things of that nature, I always ask them, do you have your spending under control? Are you in major credit card debt? Get that under control first. Try to max out on your 401k and things of that nature. And I'm guilty of that. It took me probably at the age of 40 before I started maxing out on my 401k. Probably 42, getting out of credit card debt and getting my wife out of credit card debt as well, not paying interest on unsecured debt, right, that you can't write off. And so I wish I would have, been better prepared early on, but it's never too late. And so we're doing much better. But yeah, it's never too young to start working with a wealth manager. And if, for the younger people, if they can get started at an early age, they'll be better off later on.
Well, Doug, I was asking you to answer to help out our listeners, but you're speaking right to me. Like I feel all that.
He's making eye contact.
I just like it was resonating. Like, holy smokes, I need to.
When
can I schedule an appointment, Don? How soon can I get on the couch?
He brings a great point, though. Life's short. To reach your pinnacle, highest level of success, you don't get there by yourself. Michael Jordan, my opinion, the greatest basketball player ever, he had 5 coaches in his life. Everyone needs a coach. He had, obviously, the head coach, Phil Jackson, the guy who did the circle offense, Winter was his name. He had a shrink. He had a strength and conditioning coach, and he had a nutritionist. He had 5 coaches in his life to help him get to his highest level. Everyone needs a coach. Life's too short. Do what you're great at and delegate everything else. It's a time management thing as well. And so I think that's critical as well, is obviously be on top of your finances. And believe me, all my clients, they are not naive at all on that. When we have our 3 meetings, they want to know. And basically, I have to produce the results to achieve the goal, or I won't continue to be their advisor. So it's a partnership together. As they progress along, we do with them on that.
Don, I've already learned so much. This has been just fantastic. Awesome. I am curious, just while I have you, I want to tap into as much as I can from you, just kind of looking ahead too. I'm curious about any kind of trends or initiatives or changes, just kind of in your professional realm, anything kind of around the corner that you're keeping an eye on that we can kind of share some insights to our listeners about.
Yeah, a couple things. One is, I alluded to it earlier, we haven't had a recession in 17 years. And I'm not a gloom and doom person at all. You can't be a great advisor with fear. So I'm not at all with that. But I do have my eyes wide open. Normally you have a recession every 5-6 years. We've gone 17 without what I would call a real one. You could call the pandemic one, and it counts, but it wasn't that normal 12, 18, 24-month recession. And people are kind of oblivious to that right now. So we do a thing with all of our clients called lifeboat drills, which is basically taking them through 2007 through 2009, showing them what would happen to their portfolio if that were to happen again. And it's not to scare them, it's to get them emotionally prepared for that. Because at the end of the day, success or failure comes down to having high EQ, emotional intelligence, is really more important than IQ, because emotionally, being humans, we want to flee when we feel there's danger. And when you open your portfolio account and you see it go down 20% or whatever, that can cause those feelings to come up. And that's the real value of having a coach, is that basically don't do that. And I say it a lot, with respect to the client, but that's my job, is to hold them accountable and keep the ship pointed in the right direction.
Yeah, because you said earlier on, like, there's a degree of the market's going to do what the market's going to do. So sort of understanding our why, what's really driving us, and then not making the mistakes today, even when things are pretty good, and then preparing for what will come eventually. Who knows when, but that recession, that it does come, it will come, and making sure that we're set up for it in advance, and then not making a mistake at that moment either.
Yeah. And then the second thing, Brandon, that we're doing that I'm really excited about, as our clients do reach those years of retirement and so forth, what are you going to do with those years, right? Because you're really, you're on the back nine of your life. What are you going to do at those things that you couldn't necessarily do while you were working, right? And so we're really helping them get dialed in on their health. Because in my view, especially anyone over 40, 45, your number one job's your health. And most people, we have a obesity epidemic in America now. And so we are really pushing our clients. We have one person dedicated totally to having conversations with our clients on getting their health dialed in, so that they can live that not just long life, but healthy life, which is way more important than how long you live. And so we have them do a questionnaire, which will definitely get their attention, because it's based on, obviously on their genes and so forth, but also on their lifestyle, more so toward their lifestyle. And that questionnaire will come back and say, hey, Doug, you got 30.2 years left to live, or whatever it says, right? And of those 30.2 years you've got left, 18 you'll be very active. And then 6 of those you'll start declining. And then 6 of those you'll need some sort of assisted living, nursing care, or whatever. That gets people's attention, right? So, but we don't just give them that, then we give them things to move that thing to the right, how to extend your life, but also, more importantly, I think, extend those active years. And so that's something I'm really excited that we're working with people on.
Don, I admit, I thought we were going to be talking like small cap, large cap, domestic.
I can go there too, believe me.
But this is the value.
Yeah.
Like this is what we should be thinking about when we're thinking about management.
I think so.
So again, the kind of a first step would be just scheduling a meeting with you, no cost, coming up with that roadmap.
Correct.
Yeah.
Correct.
Hey, Don, I had a question for you.
Oh, I knew you were going to do this to me, Doug.
You hear a lot, people talking about having multiple streams of income while you're working. What would be a good recommended number for multiple sources of retirement income once you're retired?
Wow, that is a great question. I'll say this first. In the before, your normal worker would get a pension. Those are gone now. Companies wised up. I don't know if wised up's the right word, but they knew they could increase their profits by taking those pensions away. So they invented this tool called a 401k, where the company would put some of it, but they started requiring the employees to start putting money in it too. So that's been a huge shift in our culture from the 80s to now. And so now it's more on the individual to fund their retirement and not depend on their company to do it. And then, especially for younger people, they better really get into saving for retirement, because I'm not sure Social Security in their life is going to be anything what it is for current retirees. I'm not saying they won't get anything, but it'll probably be less percentage-wise of their retirement income, and it'll probably be later in life when they get that. So that's a huge shift that's coming for people. So they've got to start thinking out of the box, which is one thing we help them do. Obviously funding your 401k, but you maybe should be also funding, making sure your spouse is, but maybe funding non-deductible IRAs, maybe funding a chunk of that into Roth instead of pre-tax, because we are in an environment right now where taxes are lower historically than they've ever been. I come from a world where the top tax rate was 70% in the early 1980s before Reagan was elected president. And I'm not saying it's going back to that, but it's going to go to something higher in the future. So taking advantage of these low tax environments is important. So a lot of our clients have real estate. That's not an easy thing to do, but if they go into it with their eyes wide open and understanding all the work that requires. Never in our country's history has it been easier to be an entrepreneur than now. So a lot of people are going into various forms. They may have a job, but then on the side, they may be doing some sort of entrepreneurship until that becomes big enough for them to go into that full time. So there's a lot of other things to do there, but those are two that jump to mind.
Like retiring, but still having that barista job to get the insurance kind of thing, but
or Home Depot or whatever, right?
I like that. So it's not just diversifying the portfolio; it's kind of just diversification from a bigger picture. Like, really, what are all the different sources, and how is that all feeded?
Again, Brandon, it goes back to the roadmap and the reason. Yeah, and having a plan, and then articulating what you want that part of your life to look like too.
Don, I really want to appreciate you for joining me today. This was a lot of fun, very enlightening.
It was fun.
And Doug, also, thank you for joining us to give us some additional perspective from the perspective, from the paradigm of a client who've walking this journey, and also just really opening my eyes to, okay, Brandon, it's time to act. Thank you to all of our listeners as well. Please, if you're navigating any of the financial challenges that we discussed today or any other financial challenges, don't hesitate to reach out to us at Malden & Jenkins at www.mjcpa.com, and also look on there for Guardian Wealth Management.